Hello, I'm Marcus Brix with the CattleFax Closing Bell. Today's Closing Bell is sponsored by AGA, the American Gelbvieh Association. Comments made this week from Federal Reserve Chair Jerome Powell suggest an eagerly anticipated rate cut will be coming in September. The federal funds effective rate, which is the most commonly quoted metric when discussing interest rates, has held at 5.3% since August 2023. The Fed raised rates from basically 0% beginning in April 2022 as inflation soared and unemployment tightened to historically low levels. Market participants have been debating for the past 12 months when the Fed would lower the interest rate. And now, less than 1 month away from the September Fed meeting, the market is looking for confirmation. In a speech from Friday, August 23rd, Powell was quoted saying, "The upside risks to inflation have diminished and the downside risks to employment have increased. The time has come for policy to adjust." Powell was also noted saying, "Our efforts to moderate aggregate demand and the anchoring of expectations have worked together to put inflation on what increasingly appears to be a sustainable path to our 2% objective." The latest CPI inflation number showed year-over-year price levels were up 2.9% in July, down from a peak 9% annual inflation in summer 2022. The U.S. dollar index is a composite price index which measures the strength of the dollar against a basket of foreign commodities. Swings in currency exchange rates are driven by economic conditions in foreign countries being compared to economic conditions in the U.S. With an anticipated drop in U.S. interest rates, the U.S. dollar index naturally loses some value against foreign currency. At the time of writing, the dollar index is lower on the week, currently trading at 100.7, its lowest point since July 2023. The dollar index has only recorded 2 days beneath the 100-point threshold since the Fed raised rates in early 2022. A slightly weaker dollar means goods imported to the U.S. become relatively more expensive, which is important because the U.S. is an overall net importer. The U.S. trade balance in second quarter 2024 showed U.S. imports outweighed exports by roughly $74 billion each month. U.S. agriculture, which has been a net exporting sector for decades, saw a second quarter trade balance of negative $3.9 billion. Year-over-year increases to live animal imports, as well as increased imports of beef and vegetable oils, have padded the import side of the equation. As cattle inventories reach their cycle lows, expect both cattle and beef imports to stay elevated as the highest priced global market brings in additional supplies. Thanks for watching. Remember to visit CattleFax.com to become a member, see the latest market news and analysis.